Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Dan. Well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, and there is no cost for this. There are 60 PDFs of structured trades you can download and reverse engineer, plus the Trader Lab community. Which is a group of like-minded traders who come together to leverage their collective experience. The business is built on gaming theory, in other words, statistical probabilities of one thing happening over the other, in an environment that is 100% random 100% of the time. Now, the idea of trading, if we consider that it might be like gaming, since we have no control over what the other participants will do at any time, or tweets, or any event, external events that can disrupt the environment we're operating in, then we might want to accept that it's really just a distribution of random outcomes. And if we only interact when we have an edge, it might actually allow us to operate and extract dollars, even though it's randomly distributed over a large sample size of interactions. This is how gaming works. And if we can reconfigure our brains a little bit to consider the actual business we're in, and maybe solve for randomness as opposed to trying to get confirmation and develop that certainty that we seek because of our primal wiring. Maybe if we approach the business based on what it actually is, and you can learn this in Trader Lab, we might have an opportunity to potentially achieve sustainability, and that's the goal of the Trader Lab. And of course, everybody has to do the work, and your mileage might vary. You have to invest time and do the work, and potentially have to change some of your beliefs and what this business actually is. And then, of course, that's still your call, not mine. I'm just sharing 46 years of experience with you, both professionally and as a retail trader, sitting out here with you. And maybe some of this will resonate with you, and maybe it'll save you some time. And of course, this is not for everybody. You have to find what speaks to you and what you can relate to, but you also have to do the work. There is no plug and play in this business. If there was, I'd sign up right next to you. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Got a couple of little things to mention with you today. Let's talk about, first of all, the 60 PDFs. They're available to you, and the idea of these PDFs, it's not plug and play. These are actual real trades I've taken over the years, and just other traders were asking me, what are you doing? So I posted these. And this is like 2020. So I've been doing this, you might say, for a long time, actually almost 46 years. But this process, probably more back in 2007, 8, and 9, somewhere like that. I can't remember anymore. And it took me years to get to this point. So maybe you can skip some of the wear and tear, but these are not plug and play. And most retail traders think it's plug and play. It's not plug and play. There are trades that qualify under certain conditions. When the condition changes, they're no longer qualified. This is order flow. Anyway, there's 60 of these, and the idea and the reason I shared these was I picked these trades to help traders learn the business of trading. And they only qualify when they're in alignment with the what's called context, and I will discuss that with you. By the way, there is a new mini course that was just made available over the weekend, really, on supply and demand setups, and this is based on order flow. You might want to take a peek at that. Now, if you're interested in Bookmap, all the trader education, how does order flow work, and the education is available in the Bookmap server. There's a lot of education, stocks, options, crypto, order flow, market make behavior, algorithmic behavior, a lot more. And of course, the Trader Lab. If you're interested in these courses, there's contests to win free Bookmap, which I think would be pretty good. You need to verify in Discord. If you're not verified, you won't have access to any of that. That's already in effect. I mentioned this last week. All you got to do now, if you are a current Bookmap subscriber and you are already verified, you don't need to do anything. If you haven't verified, you need to use the email that's associated with your license key in order to verify and get access to all of the Bookmap server. If you are a TOS user of Bookmap, you also need to register and then confirm your Discord. And also, if you're not a Bookmap user or a TOS user and you want to attend the Trader Lab and take advantage of all the additional education, which is available at no cost, you also need to verify. And it's free. So free is good, right? So that's business. Don't forget to do that. Otherwise, you won't have access to all the additional education. And of course, you don't want to miss out on the Trader Lab, do you? This is the higher time frame. Now, this looks like probably you fell off a cliff and hit your head a few times. This is auction market theory, and these are volume profiles. Now, before we get too carried away with what you're looking at, if you're not familiar with this, basically all a profile is a measurement of volume. And the thing about volume and price is price and volume are not, a price at low volume is not the same as a price at high volume. If you think of shopping, which is what this is, the market continually auctions. It's looking for what's too high, what's too low, and what's fair. So if the price is up here, but there's very little volume, as an example, if the price in your store is too high, somebody might buy it, but there's not going to be a lot of volume up there unless the higher price becomes fair. Then you'll get high volume. But if the high volume is below you and we run out of buyers, then the potential might be to come back to the high volume. That's called mean reversion. Now, looking at the higher time frame, and you guys know when we broke out of here, 55.34-ish was too high. And you see the breakaway. Okay, down we go, having a wonderful time. Now, here is a consolidation. Now, a consolidation, this is the same thing up there. It's what's too low, what's too high. And if we break out, see you later, we'll send you a postcard from the edge. Now, we rotate, and the highest volume is here, this orange line. Well, then we get our 90-day pause tariff day, and we squeeze everybody. And where do we come? Back here, too high. Now, there's no precision. Then we come down here, and this day we were short, and we were looking for a test of too low. Didn't get there. Up, up, and then remember, stops are above this day and above this, the gap, and then we roll over and we go down again. And on this day, we had a gap, and we're going for that. Didn't quite get there. Our buyers come for it, and now we get our big gap up. We take these guys out, and now we start rotating again. And this is Friday. Our new retail price is $54.25. So at the moment, this is too low. And then what do we have above us? A little bit more of the gap, and potentially to $56.24 to check this high volume. Now, anything can happen. This is part of the joy. This is the higher time frame. So for me, coming in today, given that we are above this level, and I was looking for continuation. So initially for me, it was longs. Initially. And of course, like everything in trading, it's what's going on. So this is the RTH Open. By the way, if you're visiting in YouTube or the Bookmap server and you're in the Trader Lab, please post your questions. I'll do my best to answer your questions. And I appreciate you visiting Trader Lab today. Be sure to give a like if you're getting something from this. It encourages me to keep doing this, and also Bookmap, because since there's no cost for this, there's really no way for Bookmap to know that you find this useful. And so they don't replace me with somebody else or just play music, a little entertainment like elevator music. Please hit the like button. And also, if you want to visit the Trader Lab community, there's no cost. Then the thing would be, use the link in the bottom of YouTube, take advantage of all the resources, and of course, the Trader Lab community. Now, this is the RTH Open. Let's look at a couple things here. Yesterday's high, which has buy stops, and then the gap fill would be up here. Okay, so we're looking for this. We also have Friday's naked volume point of control. This is the retail price from Friday, highest volume. Remember, shopping. And then there's more. The overnight volume point of control. This is the retail price from the ETH. There's more. 34 is a high volume area that we might come back to if we revert. There's more. Value area low, and yesterday's low. So these are all possible, okay? And it doesn't mean anything. Are you guys tracking? By the way, if you're listening to this, remember, if you haven't verified your Discord user with your email, and as was been previously announced, in order to gain access to the Bookmap server, the Trader Lab, and all the education, you do need to verify. And I'll put that up later for you guys. We've been kind of mentioning this to you guys over the past week. So if you haven't done it yet, do it today. So let's go to the first trades. I'm not going to go over statistics. If you're in Trader Lab, you have them. I'm going to get into the trades. So what are we looking for? Well, considering that we opened above yesterday's retail price, above the ETH retail price, we have stops over yesterday's high, and filling the gap, that sets up the potential for longs. Now, for me, starting out, it was longs only. And then I'm going to show you kind of how you might do this. Now, why would you only do longs? Why wouldn't you do shorts? Here's a little bit to think about. We opened in yesterday's range. So there's yesterday's high. So in range. And now let me just see where is settlement, guys. If I lose settlement, you got to let me know. Hold on, I got to look for settlement. 49.75. So settlement, apparently, it's down here someplace. So this is the retail price. So we're opening above settlement. Okay, we have over 90% probability to take out either the ETH high or low. High probability to take out yesterday's high, high probability to fill the gap and go north of the border. So for me, and this is part of the reasoning, the first trades are long. So how do I get long? Let's look at this. Now, these are structured trades, and you have to reverse engineer them. And I post quite actively in Trader Lab. Here's something about this, and this is what's very confusing. Obviously, everything's confusing because it's random. But if you have a trade plan, you already know where you're going to interact, and you know what structured trades look like that you have vetted. So your job is to just sit. And that's very hard for us because a lot of us think this is a video game or it's impulsive, and and that's what most retail traders do, and they don't have sustainability. So what are the opposite things to consider? to create sustainability? How about patience? So you get to see structure develop, which then you can define. How about only interacting when you have an edge? That means that a trade shows up in alignment with what the conditions you have defined, which says, I have an edge with this, time to put the trade on, and then be detached from the outcome because you have no control over it. So right here, we interact here, we get a buy sweep. And this is before the RTH open. That sets up the counter rotation. Now I have sellers here and I have sellers here. Okay, so this is the RTH open. I'm going to show you the first trades now. Now, when I say first trades, these are trades you might or might not have an edge with. And if you haven't worked them out, then you don't have a trade. You're a tourist. This set up the first long. Now, when I say it set up the first long, I couldn't take it because it ran away from me. So I have to, when I feel that emotion, like, all of a sudden the rabbit ran away from you and you're behind the tree, hopefully not a rabbit, but a leftover chocolate bunny from Easter ran away from you. And here's the reason this is a long and it's not a trade I could take. But I'm going to show it to you. This is before the open. Okay, let's come back. What happened over here? The buyers. What was here? The liquidity. Now I'm showing you an order flow trade, not necessarily a trade anybody ought to take. Order flow is here, and yesterday's value area high is there. A value area is where 70% of the volume took place. So it's a fair area. If I come outside and yesterday's retail price was here, is it too low? Great question. No clue. So here, right on the open, I test this liquidity. So I'm looking at this, I'm above this, and I'm above this, and of course my teeth chatter like everybody else. So this is a long I can't take because it runs here. All of a sudden, I'm not entering here because my plan says I have a certain amount of risk I'm willing to take. Anyway, I'm going to move on. So I see this. Now let's do something I do all the time and I talk to you about. We want to mark the opening swing low. Why is that, you say? Because what's going to happen at the opening swing low? Well, there's going to be stops there. So if the opening swing low is here, and I know there's going to be stops under here, and now I get my buyers. So let's see the first trades. Okay, so this can't get it. Would have taken it if I had a trigger, didn't have one. Location, but c'est la guerre. What's this? We take out yesterday's high, we take out the ETH high, going to the moon, there's the gap, there's liquidity, and there's a sweep. So I want to get long. Now, of course, sometimes I look at it and I go, why'd you want to get long? Well, let's watch. VPOC migration. Let's look at the language of the market. First of all, don't forget this over here. So this is too low. This is shopping. I want to go as fast as I can here, but it's hard for me to go quickly. If you got questions, post them. I can't see them at the moment when I'm over here. I got monitors elsewhere with the chats on them. So if you're in Discord, I hope you're hearing me okay. How we doing? Please give a like. Okay, thank you. All right, guys, remember if you haven't verified, click the link in the bottom of YouTube and it should take you to a verify location and you can verify yourself. So this suggests counter rotation, and this out here is an outside edge of a distribution. Now, how does this work? If this price is too low, and now we find this is where our sellers were. You can see the sweep, our sellers, and we get a reaction. Now I'm going to put a little box around here for you. This is a piece. Sellers, and there's a sweep. I come back down, my outside edge. Now I'm out of range, out of value. That suggests to me longs. What does this say? Let's talk the language of the market. I always like to mention I don't use indicators. What I found was they might have their place, but this is not a spaghetti line crossing over. This is, where are we? Above yesterday's high. What are we doing? Well, we got our buyers. And where's my outside edge? It's out here. So if I rotate, I've got two locations. I've got this, and I have out here for longs. And it's called mean reversion, underlining the word mean. Okay, watch now. So this is a level of support. We come below it. There's no trigger here. The next place is down here because this was too low, and then out here if we pick, because this is the area to observe. So I have my liquidity. These guys were absorbed. The liquidity is back in the book. The stops are under here. I'm above this, so I'm still looking for longs. And of course, I start always asking myself, what are you doing that for? Well, that's the plan. So where's my stops? Here. Where's my liquidity? Here. Where was my absorption? Here. Let's see what happens. Right here is a long. Because, why? Stops are here. Buyers are here. There's absorption here. There's your iceberg. But I want to get the stops out, and it's called fuel. If I get the stops out, and I have and this is the way to think of this, this is not a rigid process, guys. There's slop in this thing, a lot. But if you know this, the buyers in this leg, where are their stops? They're going to be under the low of the day, current low, where the buyers took over. But the weak hands have their stops here. So if I'm going to get long, I want, and my plan suggests, I can come here, because that's the retail price from Friday, or I can just come out here, get these guys out, and then I can do something called mean reversion, which is come back up here. So I'm in the long camp, mean reversion, So there's my bump, and here's my stops. Now I'm ready to look for a long. So this trade was here, scale, pullback, support is here, right? There and there, okay? And the target on this is this, and then hold. So longs. And I was posting in Trader Lab about these things. I said, guys, longs. Now, one look at this. Now, when this is going on, I'm like you in the sense of I can't predict anything. Trust me on that. If I could, I just, So let's look at this. The sellers are here. I get a sweep. This suggests downward rotation, not a reversal, a rotation. So right here, I get VPOC migration. This is suggesting at the time that I'm going north. So I'm going to label this. This is the new retail price. This is just process, guys. So currently, it's longs only. And as far as I know, north of the border. So, and what does this say? Let's look at this. When I break out here and there, it is suggesting this is too low because I'm above it. Now this is the retail price, but this now is important. So let's watch and see what it does. This is now the retail price. Now I'm going to show you some profilage ideas. This is the outside edge, or a low volume node. Let's just label it. And let me explain what this means. By the way, if you have questions, post them. And again, if you want to review these streams and there's a lot of information in the Trader Lab, how to do this, but you have to vet it and design your plan based on the rotations or time frames you trade. And so in Trader Lab, we can have traders short and I'm taking longs. And there's not one way to do this. And I couldn't even tell you which way. There is no best. What there is what fits your psychology. Some traders are basically purse snatchers. They might be fearful or not, and they just want to get in and get out. And if they have an edge doing that, they're going to trade a lot more often. And if it adds up at the end of the day, that's fabulous. Our typical belief systems are that we are risk adverse, right? So the idea of smash and grab, you've heard of that, right? Appeals to some traders. But what is the basis of a decision to do something if you don't know that it has an edge? Is it because of psychology and fear that we make choices? And this is just more of a universal, almost a philosophical trading question. Do we choose to do behaviors because our DNA and our wiring suggest we are risk adverse? We all are. But do we then make choices that determine what our potential outcome is going to be as far as a business model based on our fear? Or do we make the choices based on facts? You see, something to think about. So here, right here, this is our next area and up. As far as I know, we're going north. Till I don't know different, I don't know. This is our retail price. This is our resistance now. So nobody knows. So let's watch. Market comes down here. Now, this is a pretty substantial break. And my outside edge is down here and over here. These are low volume nodes. The idea is if this is the fair price and we come outside, we can rotate back. That's called mean reversion. So let's see what happens. When I break below this, it says too high. Then the possibility is to find too low and come back here. So let's just see what happens. VPOC migration. That says too high. When we break here and we don't regain this, there's trouble right in here. So let's watch VPOC migration. Let's talk the language of the market. This is the retail price, and it's the fair price up here. But if we leave it and we come back and we get over here, and now the idea here is potentially to come back here. But what happens here? The VPOC migrates down. Now there's two possibilities, of course. Here, let me show you. Now I don't know, so don't look to me to be able to predict anything because I'm not able to do that, so I don't try to do it. This is very important here, right here, because of what happened here. Sellers were here, and we got above this level. Absorption took place here. So these sellers were absorbed, and now the buyers are still in control. This moves up. Everything looks like the sun is shining for the longs, and we're looking for this. When it breaks below, if it doesn't regain this, then count it, then back here. Then this sets up a potential long here and out the top, except it falls below the mid in the VWAP, and this shifts. This sets up shorts or get out of Dodge. It's one or the other. Now, VPOC migration. Let's look at behavior. And once you see this, you'll get a bit of an understanding of auction dynamics. Think of this as shopping. right now, this is too low. We're going north. We break below. What does it say? Maybe too high. It shifts down. Notice what happens here. Too high. What happened over here? Too low. What happened up here? Too high. What happens over here? Too high. What happens over here? Too high. You see it? And where is potential support? Here. Watch. Just watch. So this right here is support. Break through it. Sell sweep. Looking for a potential rotation. Nada. Zippo. We're below this. Come back here. Watch. Overnight mid. There it is. Wondering where that thing went. Hold on a second. Overnight volume point of control. This is the retail price from the ETH. Now, when trying to remember, hold on, I got to look at my book map here. My trading book map. Let me just see where this was. I thought I got long summer down here. I gotta find it. Yes. It was oh. This is the mean. And oh, I've got some trades in here. I don't think this. Here you go. So this is where the buyers were, and here's the liquidity. When we come back down again, and this is where I took my next trade, it was here. And the reason is overnight mid is a target, and I have my liquidity and my buyers. Now I can't buy here. You know, it's like, oh, look at that. But now I know my buyers are here and my stops are here. So when I come back here, overnight mid, my liquidity comes back in. So this is kind of a hybrid trade. And the other thing I have to be aware of is the overnight volume point of control is the retail price, and it's wherever it went, there it is. So it's a level. So I know I can come down here and there's a high probability of getting here. But what do I know? I got longs in here, and if I pick these guys off with no follow through, I can get long. So what I did is I have this level, I have this level, and I took a long, and I get my sweep, and I got long in here. Let's look at it. And where am I trying to go? Great question. Where's my, it was up here. Variable high volume node. This is called mean reversion. We're in two-sided trade. The sellers were here, and the sellers come back in here. So I got a long, got scaled, and then I'm looking for it to come up here and maybe outside. Still trading the longs, though I know there could be big trouble. Here, I don't get back above this. This is a problem, and this is the retail price. So the retail price is lower than this one. So that's my resistance. And the possibility of getting here is over 80%. And the possibility of taking out the first hour's low, at which is 9:30 Central Time, which is down here. Since we took out the first half hour's low, we have over 90% probability of taking out either the first hour's high or low. So there's a high probability of getting here. So the long for me is a mean reversion trade, and then we have to see. Because maybe that's too low. Well, when we fail up topside, that sets up shorts only, and we couldn't get back inside, and that sets up shorts. Now it's just shorts. Then we're looking for this, that, and out the bottom. Now there's more. I'm going to show you. And for me, and see, when I talk about these trades, I trade in larger rotations. I'm not trying to, I mean, I just don't mess around with these, like this kind of stuff. I want to lean against structure. So I got something behind me other than tissue paper. And if I get a retracement and I have open targets, then I put a trade on. If I don't, I just don't do it. Now we have another trade in TraderLab called the IB continuation trade. So there's two possibilities here. Since we're breaking down and we're under the first hour's low, we have two structured trades here, depending. One is called the IB failure, which is a mean reversion trade. And since the market's long from Friday and Thursday, what does that say? It says that if we can't continue higher, the longs in the last 2 days, then can go on a chopping block, okay? And they can be thrown under the bus. So we have two trades. Again, one is a long, which is not qualified since we're falling out of balance. And the other one is a short continuation trade. Let me show you the short continuation trade. It's called the IB continuation trade. Now, the IB is right here. So, and there's a couple ways you can do this. Here we have a sell sweep, which suggests a potential counter rotation. I have resistance here. The absorption was here, and the buyers failed over here. I get a sweep, and I have this, and this suggests counter rotation. If you took this trade here or here, you would take a stop, okay? Real world, that's the way it is. Now what? Let's look. We come up. Outside edge is up here. It's a low volume node. Let's watch. Break below the IB again. So what do we know now? Maybe this is too high, and I now know if I can get below 33, I can keep going. Let's see. This is the IB right here, IBC. So if you took it here, you take a stop. We have to always get over that. Break low. Sellers still in control. We had a little squeeze going on here, but the sellers, the icebergs are back in here. This is micro high volume. There's no way to know. Once it breaks down and you see your sellers, it's the same trade, and it's here. Trigger, resistance, outside edge, location, like real estate, south. So that's a short in the TraderLab. Then it's up to you how you manage the trade and targeting. I think I might get caught up pretty quickly, right? So what do you do with this trade? Well, first of all, it's subject to your time frame. Yesterday's value area low is a target, and you could also just take the ETH low as a target. So all these are up to you. This right here, we took it out and we had buyers here. When we come down here, now this becomes trade management. And this is something individually you have to deal with. And I'm always dissatisfied with trade management. And it's really purely emotional, for me, because there's the lunatic under the hood who is emotionally attached to open trade equity, wants it all. And that's the lunatic. It has nothing to do with trading. If this is resistance and I break, you see it, I break below it, then I can continue. Right here is resistance. This is resistance against these sellers. That guy was absorbed. I break down. So going to zero, right? Part of the joy. Where's my resistance? It is up here. So if I'm holding this area, it still looks like it's going to go down to me. So where were my buyers? They are here. Look what happens over here. Now, this comes in like, and this doesn't mean you do anything. What this is suggesting is you need a trade management process. Now, if you had your stop sitting, here, you'd get picked off, the trade would be over. You just accept it and off you go. So this is an outside edge. There's your sweep. There's your liquidity. And what's the problem? Well, if we go that way, we're going to get squeezed over here. And if we get this and then we can take it out, we continue down. And again, that's a target. So squeeze. I haven't seen any of this. So let's look a little further here. Where are we? This is an outside edge. It's called a low volume node. The liquidity comes in the book. Let me show you how these pieces might be put together. This shows up, and this is location, and location is out in here. So this is your location. Liquidity comes in. I have sellers, buyers are above the sellers, buyers are in control. I get some selling icebergs, buyers are here, going to the moon. What happens here? I get below the buyer. I now have micro high volume in here. Market comes down, it checks support. They come back in. Where's my resistance? It's up here. What else do I notice? 1,375 icebergs. That is meaningful. I think that's correct. Maybe it's 137, 132, sorry. Yeah, 137 icebergs. That's something to notice. The high volume in here is an auction. And when the sellers get below the buyers, that's where the buyers were active, right there. So now the sellers are in control. This is a trigger. But how do I get into this? Well, I can sell it here, or I can sell it here and get short here. Stop is over this, and where you're trying to go. Back to this liquidity and out the bottom. That's where you're trying to go. Oh, there you go. Where are we? Oh, there you go. I'm going to look at the higher time frame so I can kind of see where we are with all this. Let me see. We were around 5,500. 54.25 is our retail price in this last 3 days. This is up to Friday. This is the highest volume. If we find too high, and I think you might say we got outside. 56.24 was a key location, as was 33.34. So let's see, how high did we get? 56.24. We got the 55.78. We have yesterday's low and 54.75. So this is the potential targeting. And it could be a outside day, right? So that's what we're looking for. The longs have their stops under here. This is not a trade recommendation. But when you're thinking about this, you got to think, where's the fuel? So right now, the longs are liquidating and the shorts took over. The fuel is below yesterday's low. Are you guys with me? IB low 2 can be a target. It's 2 standard deviations of yesterday's value area. I'm sorry, IB. Got that wrong. This is 2 times the initial balance, which is the first hour's range. when you come out of the initial balance, typically it means that a higher time frame participant is driving the market. So I think we might agree at the moment, unless it changes, subject to your rotations, is that the sellers are in control. So as long as I have this, and this is not a recommendation, I'm just looking for shorts. So this is an area in here to observe. Let's look at it and let's talk about why. First of all, yesterday's value area low. We're out of value from Friday. This is the outside edge, and here is where the liquidity was. So I'm going to make a little mark on this thing that this is an outside edge. And subject to, and there's no precision, part of the joy of randomness, if it comes up here, I'm going to be stalking an opportunity to potentially interact, and this is not a trade recommendation. The reason for this would be this is the outside edge. So if this is too high, because it's high volume, I'm not paying that, and then we leave it, and now we start auctioning. This is where we broke out of this volume. So if we come back up here, and this might still be too high, we don't know, and we come out in this area, and don't forget this, we have some alignment. Now, then the next thing would be, and these are not recommendations, I take stops all day. I mean, you know, it just doesn't matter, does it? It doesn't matter. It matters, then you're trading without a plan. When you have an edge, taking the stop does not matter, other than you're wounded emotionally, right? But in the business, which is what I'm hoping you're focusing on, not your feelings, you need to learn detachment. And that takes practice and intentional practice. Now, here's our location. Let's see what happens. And this is not a trade recommendation. This is the area. And open it up. We'll see what it does. Okay? Let's just keep an eye on this. Not a trade recommendation. It is just something of curiosity. You know, there's nothing in trading that is predictive. The best you have is maybe. Maybe we'll revert back here and here. Maybe we'll take out this low at some point or not. And maybe we'll get here. So let's see what might happen, maybe. You guys have questions, I can come up now and take a look. Thanks for your patience. And again, the market can do anything. It doesn't care. You know, the rotations are random. So we just have to kind of wear a helmet. Are you guys with me? Ben, the IBF is not qualified because the market rejected the value up above. There is, I'm sorry. Yeah, IBF. No IBF, Ben. This is all about context. You need to be able to narrate the condition of the market and define when it changes. If you're in Trader Lab, you would understand this. Are you in Trader Lab, Ben? So this is Investor RT is exporting these levels. This is the low volume node. It measures the volume. So of this behavior, this is where the outside edge is. So if I get short, I really need to stay under here, or else we're going to reject this for now and come back here potentially. So if I'm taking a short, which is not a recommendation, right? Then, and here's what you have. The buyers, here's where the sellers are, and the buyers are currently stronger here. Now, the question becomes, if we see more buyers, do they get traction, or are they being absorbed by the sellers? So when I see delta, I'm not just looking at delta in the sense, oh, I got a large buyer, of course, and the market can go up if they are absorbing the limit, the other side, the passive side in the book. But if I have more passive sellers and I run out of buyers, then what? Then we're going down. If this, then that. If not, then what? If this is too high, potentially that. If it doesn't go down and these buyers consume the passive side, then what? Then up. You see it? So Ben, no IBF. Unless, of course, that things change. And it can. So what do we know? Too high. Where is it? Right here. If it's too high, where might it be too high? Right there. Is this a short in the Trader Lab? If it's in your plan, it is. It's in mine. And I'm not saying it's a good plan. It's just the plan. Are you guys with me? How are we doing in YouTube? How about a like? Is this making sense? Can you guys see why? Not will it, why it might. Write this down. The best you have in this business is maybe. Maybe this is a qualified trade if you vetted it. Maybe if you come to Trader Lab, you can learn this. And I'm going to tell you, there's no plug and play. And we're all disappointed because we just want a nice little red light, green light. Trust me on this. I tried it. Too many years. Too many collisions in the intersection. So, okay, we have a sweep. This suggests either a rotation up or, and for me, I don't have any longs at the moment. And again, I don't make trade recommendations. I take stops. You take stops. Let's get over it. It's overhead and cost of production. It's not about you being right or being smart. And I understand we are emotionally attached, but this is about detachment. What I do is when I get a trade, I put it on and I'm really curious about what's going to happen. Aren't you? But I'm not, but I'm okay with it because I know I can take a stop as well as on any trade. But what else do I know? The context is down. If I come and I've rejected this level up here, if I'm outside, I can come there and I can now come up here. Where might I want? And value area low. Value area low. If I'm outside of value here and I come back here, outside edge, I am trading something called mean reversion. The mean is down here. The outside is up here. So it sets up the short to come back to the mean, which is this. I get a sweep. It sets up the counter rotation. So if you're trading this, what do you do with this thing? Well, the possibilities are, and this is something you have to vet. If you take a short here, where were the buyers? They were there. Does this give you an idea of where you might want to scale? Wouldn't it be, and this is just something, to think about, if the buyers were here and the sellers in here got absorbed, that seller right there, and the buyers got above the seller, and the sellers were here, and we take them out, then the buyers had an appetite here. If I sell this, where's my scale? Wouldn't it be here? Because the sellers were here and now we took them out. So if we come back here and I see a sweep, would I scale? In your trade plan, it's not a fixed number unless that's your plan. In other words, if you put this trade on here, or here, your stop's there. Where's resistance? You see this little high volume? Resistance. And what's down here? Support. I'm going to draw a little box around this because what I'm going to show you is market mechanics. How does the market work? Why does it do what it does? Why did we get that? It's sweep, location. The buyers are here. The buyers. Where are the sellers? Watch. Let's look at the high volume. This is all structured trading. This is an auction. This is the same as the VPOC. In other words, if I go down in time frame or fractal, it looks like this. Whoop, get over here. So this, let's go back and look at this. This, we broke below it. This becomes resistance. Come back and check it. Where are we? Outside edge, value area low. Look at the pieces. I get these sellers are here. I break low. These buyers are absorbed here. I have a sell trigger. I can sell this here or here or here. And I have to scale here because my buyers, there's my scale, there's another short, there's my scale, and where am I trying to go? Somewhere south of the border. Are you guys tracking? I hope this is making sense. Are you guys with me? How are we doing in YouTube? Please give a like. If you're getting something from this. It's the only way we can encourage Bookmap to keep this stream going and the Trader Lab. So we need your support. There's no cost for any of this. So I guess if you can give me a like, we'll call it even. What do you think of that? This is Trader Lab process, Trader Lab methodology. You can all learn this. Now you can learn it, but you're going to have to do something with it. Roll your sleeves up. And here's the thing, and I have to mention this, and I apologize. You've been following the stream. I've been doing this for a number of years now. And then I apologize for repetition. But we have new visitors here all the time. So here's the thing. And everything I share here is based on my experience. It's going on 46 years. I manage money. I was a professional in the business for many years. And of course, now I'm sitting out here and I just trade full time. And then I do this. What I learned over many, many years of trying to solve the problem, which is randomness, was I was curve fitting to try to get develop confidence and to have predictability, in other words, predictability, and to create certainty and confirmation. And using indicators and then trading systems that I built over many years. And I kept thinking I was on the right track. I just had to make it better. I did not understand. And when I started, there were very few off-floor traders. I didn't know any. Everybody was a floor trader back then, 1980. So I was clueless. And back then, technical analysis, which was kind of new, Wells Wilder, we were just getting it, where we didn't have PCs or any of this stuff. So it was very rudimentary, and indicators were kind of new. So indicators or technical analysis was looked down upon as voodoo. Everything was really driven by fundamentals, reports, money supply, grain reports, Beaks with the orange juice report from trading places, all that kind of stuff. So that's how the business was seen. And then we had classical bar chart. So basically, now let's watch this right here. Sweep into liquidity. What do we know about this? This is support. This is support. This is resistance. And where are we trying to go with this thing? IB low times 2 is a potential target. we're outside of yesterday's value. We still have targets underneath us, not a recommendation, which is down in here. Now, the problem, of course, for us, and I have to finish the thought I was saying, is trade management. Right here, you have 296 sell stops. Thanks for playing. This is when your broker sends you a coupon to the buffet, and this suggests counter rotation. So this is where your plan is already designed and developed. What time frame are you trading? Are you trading from here to here? Nothing wrong with that, you know? Or are you going to sit through and risk giving back open trade equity because you're going here? Which we don't have to get to ever, you see. I'm asking you the question because you already need to know the answer. If you don't know the answer, you got to get to work, because you cannot make these types of decisions in a random environment. Sorry, guys. The decisions are made outside of trading, and you just show up and do your thing. If your thing is, I don't know, no good. The market's random. You need to be anchored. That's the only way you get to measure what you're doing, because all of this is random. You know, why didn't it just keep going? Well, because there was absorption here, and we had a sweep, and these buyers came back in the book. Now, the fact there's buyers here doesn't mean necessarily it's the low of the day. It might mean that whoever these players are, based on their time frame, they might be selling here, buying here, and that's all they're interested in, and that will move the market around. So what's your plan? Are you guys following? How we doing? So Ben, are you in the Trader Lab? How we doing, guys? Is this useful? Should we keep doing this? So now, our stops are here, and our resistance is this high volume. And if we come outside, we can squeeze these guys out and then potentially either just pop, come back, or pop and come here. Let's see. Notice where the selling was. Wasn't it there and here? What does it say? Let's talk the language of the market. The language says potentially. I can only use the term potentially because that's all you got here. Is this, these sellers were absorbed. Okay. So the seller, the buyers are here, the sellers are there, and that liquidity from here is over there. So I got pieces. Notice the pieces. I get my absorption, I get my counter rotation. What do I know? This is too high. Where do I come back? Let's look. And it can do anything, so let's not get crazy here. Too high. Where's the trade fail? Out here. What do you do with this thing? I don't know, because I don't know your trade plan. I'll tell you what I do. I look at the auction in the language of the market, and I'm not saying this is a good plan. Believe me, you can come up with a better one. No doubt about it. But you got to start, in my opinion, with a broad stroke and learn to understand how the market works. That's called context. Context is the condition of the market. So what was the condition of the market? Well, starting out today, we're still squeezing out shorts, and we're looking to find too high. Where's too high? Good luck with that. Nobody knows. So you take the longs until they fail and the construct changes. Then, based on your definition of context, in other words, if this, then that, and it goes up. But if not, then what? Well, we fell below certain levels and we're rejecting the levels above. If not, so if we don't get above it, then what? Then we turn the barge around. And once we violate the long side structure, we only take the shorts. Or you do whatever you want to do. You can trade long, short, and there are traders in Trader Lab who are going to go buy this, sell this. I tend to find that rather active. So, and that's only me. It's only because I used to be a high volume trader many years ago, and I just sort of take a more relaxed approach and more patient approach because I trade for larger rotations. So if I get on a 10, 20, 30 point trade, that's kind of what I'm attempting to do. So when and I'm not saying that's a good plan, I'm just saying it fits my psychology. But I also pay a price for that. And that is, if I have a swing like this, by the time I get out of it, I might be getting out of it, when it comes back here. So all this MFE, you might lose your mind doing that. So, I might not lose mine because I'm more patient. I take a little longer term view. So psychologically, you have to kind of find what is aligned. So now we're getting above this. So now maybe there's nothing to do. I still have my outside edge. So we're going to want to see what happens up here. You guys have questions, by the way. It's a good time to throw them in the hopper. Please give a like. The other thing is I want to just remind you of something. If you want to visit the Bookmap Discord server, you need to be verified so you can have access to Discord. And verification is very simple. If you're currently a Bookmap subscriber and you haven't gotten verified, you would click the link in the bottom of YouTube and you would verify with the email associated with your license key. If you're using TOS Bookmap, you need to register, and it's free, and then you can verify and have access to Trader Lab and the rest of it, and all the additional education in the server. And if you have none of the above, you still need to verify and just register. It keeps the phishing and spammers and the rest of it out. And there is a new course that's available, supply and demand setups. Verify yourself, get yourself over there and spend a few minutes with this, plus all the other education. And if you come to Trader Lab, there's 60 PDFs of these trades I'm referencing. It's not plug and play. It's an educational porthole. And what I'm doing in the Trader Lab is probably different than what you've seen before. I don't use any indicators. Basically, I am using common sense, logic, and process, and then vetting specific trades. Where did we come? What's this? I'm not paying that. Let's come back to retail. This is called mean reversion. If we think the context is down, which for me, yes, where am I looking to get involved? This suggests a counter rotation. This is resistance. What's this? This is the fair price. If I take a short from here, I'm coming here, and then I'm looking to come out the bottom. If it takes me out, I could scratch here and just come up out here and put the same trade on to come back here. This is the mean, and this is called reversion trading. And if we think the trend might be down, it's only outside, in, outside, in, outside, in, outside, in. And then we're looking to fall out the bottom or get squeezed out. Pick one. Do you see the logic here of how to trade mean reversion shorts in a fractal? This is the thing that makes you crazy, among other things in this business. Not only the randomness, but what time frame or fractal are you trading? Now, for me, I don't use time. For me, the interaction of the interaction between the buyers and the sellers is not based on the clock. It's based on what happens. If the buyers are here and the sellers absorb them, and over here the buyers are here and they absorb the sellers, that's what creates this. If I break below where the buyers were and my sellers take control, then if I come back here, I can sell it. You see, I get the same thing here. The sellers were here and the sellers are under the buyers. If the buyers come back here, who might be waiting for them? The sellers. Where's my mean? It's there. Mean means I'm not paying that. Retail. Out here, outside edge. You got to be kidding. I'm not paying that. Where's it in alignment? All of it's aligned. We sell this, I'm coming back here. That's the mean. So for me, I'm not saying this is a good idea, just giving you a sense of it. Short to here, remember? Because the buyers were here. Short, so short there to the buyers, short there to the buyers, to this, who knows, sweep, liquidity, back to here, short to there, back to here, short to there, back to here. Let's wait and see. Stops are sitting here. Let's watch. Not a recommendation. So, and now your trade plan has to also suggest what you will do with your runner if you have one on. How are you managing this trade? Now, if you're sitting here going, what should I do? Make sure you get the cocktails and the ticket to the buffet because you're gambling. If you're asking yourself what you should do, where does the answer come from? Does it come from a plan that you know has an edge? No matter the outcome of this trade, you already know what you will do when it shows up, or are you operating out of fear? Gee, I don't know. I think I'm going to lose. I don't want to get stopped out. It's going to fail. I know it. And if you do know it, let me know because I don't know. So I know it fails up here. And it might just come out here and then revert back here. And in my plan, and this is not a recommendation, I'm only going to give you some maybes. Maybe my plan is if I get taken out of this trade where my sellers were, and we can pick the stops and then come all the way back. Maybe if I get taken out and I just pop, I might sell it again to come back here and come out the bottom. Or if I pop, I may just wait. What is my plan? What is your plan? The answers must exist before you're in the market. Otherwise, who's driving the boat? Hyde's the emotional lunatic that oscillates between panic and greed. And when you are stimulated by these emotions, you're going to potentially make decisions that are not in your best interest. They are in the best interest of the lunatic under the hood, who's Hyde, Jekyll and Hyde. Hyde is an emotional being who's only out to protect you. And unfortunately, it may protect you from profit potential because Hyde is clueless and is wired to protect you from the saber-toothed tiger. The risk of taking a stop and the risk of giving back profits are experienced the same way by the lunatic under the hood. The way you manage the lunatic is to know what you're going to do before it happens. So you just are following process that you have proven gives you an edge over a large sample size, not this one unique event. Does that make sense? We doing all right, guys? So now we're picking these guys off. So we want to see what happens here, right here, outside edge. There's no precision. We had precision, I would still be trading my systems. You know, turn the thing on, sit back, order your pizza, and then at the end of the day, go down to the basement and make a withdrawal from your ATM. Wouldn't that be nice? That's not the business we're in. We're in the business of gaming, in my opinion. At least that's what I've figured out after too many years and too many brain cells that are dropped on the pavement. So what do we know? Not what will happen. What do we know? We know the sellers took control here. We know we have resistance up in this area. We know there's stops right here. And we know if we come out here and pick the stops, which, can happen. And if we can't get out here, then we can come back here. That's what I know. Now, the thing I don't know, which is the same as you, is will it do that or will it just continue squeezing? That, my friends, is, as they say, the $64,000 question. What I know is I have stops here. And right here, I've got to watch to see who's taking control. The buyers are above the sellers. The buyers are in control here. And my sellers were in control here. So these are outside edges and areas. So we just want to watch. Okay. So I'm looking here, and this is not a recommendation. I'm stalking a short. And I can quickly, if I put a trade on and it doesn't work, I hit the eject button and I'm out of there. And this just based on my plan. So my plan is looking for shorts, and I have to see, right now the buyers are in control. You see the delta? Here's another thing. There's more buyers. Sellers took a shot here. No bueno. And I still got my buyers. So I'm watching the delta. I'm watching the order flow. And I'm outside. Now I have to be very careful right here. Because if I get above this, then I can just come up here. That'll be the next area. So I don't have a sell. I'm looking for one, and I don't have it. If I don't have it, I just go, that's interesting. And that's exactly what I do. I go, that's interesting. So what I know now is my next retail price is up here, and I can check this, and then out here. So I have this is called the distribution, and this. So if I get out of here, now I can wait. I don't have anything I need to do here. I am going to look at another location. So my sellers are out here, low volume node. My high volume in this distribution is here. Think of this like shopping. It was too high. So if I come back here, we're going to check the price. So right now we know this is too low. That is too low. This was the outside edge for the continuation shorts. If I get outside of this distribution, I'm going to check this, and I can continue to rotate up. That's what I know. So now I'm going to look. Let's come back. And now here's the other thing about this. This is not like there's a green line and now you're supposed to do something. You need to understand what these things represent. The fact that we've come out of here suggests this. Why? Because we rejected it when we were here. This auction, buyers were here, sellers were here. Once we broke away, new auction. If I leave the bottom auction, I'm potentially going to come here, and I can come all the way up, out here. So now my job is to go, well, where's the stops? Under yesterday's low. Where's the low of the day going to be? Good question. Don't know. I already took out the high, and I have range extension low. I'm below the overnight volume point of control. I'm below a micro composite volume point of control. That was important. I'm below this outside edge. So for me, I'm still going to be looking at it the short side from locations where I have triggers. This would be one of them. This is another one of them. And then we're just going to tour. These are not trade recommendations. What I do is I identify areas. I try to stay in alignment with the condition of the market, and I wait very patiently. I'm not in a hurry. If anything, I'm not in a hurry. So what do I know here? Let's come back. Let's get back here. I know the sellers were there. I know, remember, the sellers are up here. So if this is too high, I can come back here. So now this is like a reversion trade to this distribution. Let's watch the behavior. It's like you've got two forces pulling. You've got this force and you've got this one. We came outside. This is the next location. Now, there's no precision in this, which is, the kind of thing that makes us crazy. But we're also above this. So this is an important over-under right here. Now, here's something else for you to ponder. If you don't have a trade, you just sit and wait. You go, that's interesting. This is what I do. I go, oh, that's nice. Look at that. Sellers are here. Buyers are there. Sellers took control here. Where's resistance? It's right there. Then where would you be going? Here. Not a recommendation. Now, if it's not your trade, there's nothing to do. You can get there. Actually, what you have to be conscious of is this. But for me, it's shorts only. So a long for me, and I'm not saying it's a good plan again, it's just to cover the short, not to get long. That's the alignment. What else do I have over here? Let me look at this. This here. Sellers are here. Sellers are here. Buyers are there. The volume is in here. Let's just see if we can figure this one out. Now, the way I look at it is consolidations or auctions. So I really kind of gravitate, if you will. Let's put this here. Yeah, I don't know. Let's just see. I mean, you can be putting these all over the place. This was the area, right? Now, here's what's really important. If you don't have a trade here, there's nothing to do. For me, it was the LVN, mean reversion. If I push outside, it sets up the HVN, which I think was up here at the time. So it didn't quite get there. If I go down in time frame, the sellers were here, the buyers were there. There's my breakout, okay? So I know the sellers are up here. If I come back to volume, and I have a structured trade here, so this, and my sellers take control. My buyers are there and there. My sellers are there. There's my trigger. My test would be there. Now, if it's not your trade, you just sit here and you're a tourist, and you go back after you've done your trading, and you isolate this and you go, what do I understand here? What does this say? And the thing in trading, at least for me, is anticipating locations of behavior and then trying to align with the higher time frame, however you perceive that. For me, it's shorts because the longs are, when the market gets long, remember how the market works. Market goes up, go down, and then the market goes down, go up. The market goes down, go up. The market goes up to go down. The market goes down, go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. Down to go up. And it goes up to go down. The market goes down to go up. The market goes up to go down. Okay? So it's this rotational thing. And it does it in all time frames or fractals as you think about it. So the market goes up to go down, the market goes down to go up, but the trend's down, right? So the market goes up to go down, the market goes up to go down, the market goes down to go up, goes down to go up, goes down to go up, up, goes up to go down. So what you're doing is, no matter the time frame or fractal is, the longs in here, their stops are behind them. The shorts in here, their stops are above them. The shorts in here, their stops are above them. The trend is down. You want to be taking longs or shorts? Andrew, my settings, you can get all that in Trader Lab. The 60 PDFs of structured trades, a library of webinars is in there. There's over 600, somebody told me the other day, which is pretty amazing. I'm going to try to show you the Trader Lab, but if I disappear in Discord, guys, let me know right away. Things get nasty here. There's a sweep, by the way. This is what the Trader Lab community looks like. Interaction, trade discussion, charts, all kind, and mutual support. And I do a lot of posting, plus, I trade, of course. I don't call trades. That's a waste of your time. The idea of Trader Lab is to help you build out the business of trading and kind of separate the fantasy of trading from what it might be. Now, everybody finds their own truth. I'm not saying what I do is the solution for you. I'm going to say is I've done everything else along the way over going on 46 years of this trading. And I kind of found, unfortunately, I wasted years trying to fix a defective process. I didn't understand. I was looking for certainty and confirmation, and what I had was randomness. Now, we still have randomness, but I didn't have notice the sweep. So subject to your plan, you could be covering this or trailing. What is your plan? By the way, I posted this weekend some really good stuff. Thanks for posting this, Willers. Very nice. You can see the charts, and let me see if I can find Saturday. I just want to show it for you. I don't know if I can find it. This is all this morning. So I post a lot in the Trader Lab all the time, and if I'm up doing my research over the weekend, then you come to Trader Lab, there's a lot in here. There's another chart. Anyway, I can't find it, but there were a bunch of recordings, psychology, the elements of learning, like how do you learn? And here's the webinars. Thank you, Ned, for curating this. Everybody should give Ned a thumb up and a hug. Otherwise, this wouldn't be available. This is the primer webinar. It's about an hour. It gives you a high-level overview of this process. This one is Meet the Trader Lab. This is advanced trading methodology and process. You can learn it, but it's not elemental. And it doesn't matter how long you've been trading. It's really to develop a better understanding of the business you're trying to be in. And also watch this one. It gives you kind of a snapshot of the full process. I planned, I saw, I traded. And then there's a whole boatload of other ones in here, and a document section. And these are not only my contributions, but this is a community, and it takes a community. There's data mining, research, mutual support, and it's a unique environment, I think, for developing traders. If you're interested in the business of trading, you might want to use the link in the bottom of YouTube. There's no cost for this, but you do need to verify your email. And it's basically to keep the riffraff out. If you're currently a Bookmap user, you need to get verified to continue to have access to the Bookmap Discord server. You can use your email that's associated with your license key. If you're already verified, you don't need to do anything. If you're a TOS user, you need to register, but it's free. And if you're not a Bookmap subscriber and you're interested in all the additional education, including the Trader Lab, you can register. It's free. Just click down here, register, and I'd look forward to meeting you in the Trader Lab. Please give a like on the way out. Please review the streams and visit the Trader Lab and say hi. I'd love to meet you. Thanks again, guys. Don't forget the like on the way out, and thanks for supporting and visiting the Trader Lab today. Look forward to seeing you tomorrow.